for IRS Form 8960, which helps taxpayers calculate net investment income tax for individuals, estates, and trusts. So we're going to briefly review this one-page form, and then we're going to go through some of the form instructions. And then once we've gone through the form instructions, we'll actually go through this a little bit more detail line by line. So there are three parts to this form. There is the part one, which is your investment income, part two, which is investment in expenses allocable to investment income and modifications, and then part three is the actual tax computation. So the first question most people have is, who needs to complete IRS Form 8960? And for that, there are a couple of things we're going to look up in the form instructions. So for any tax form, you can always find detailed instructions on the IRS website. So the first thing to note is that individuals who have a modified adjusted gross income that's over a certain threshold and net investment income must pay 3.8% of the smaller of A or B. And so we'll break that down as we walk through the form, but the filing threshold for this tax form depends on your filing status. So if you're married filing jointly, or if you're a qualifying surviving spouse, widow, or widower, your threshold is $250,000. That means that if you're filing in that tax status and your modified adjusted gross income is lower than that, you don't need to complete this form. Married filing separately, the threshold is $125,000, and single or head of household, the threshold is $200,000. So the other thing that I would like to point out is at the very top of this form, there are a couple of boxes, and they all refer to the instructions. So we're going to walk through those. The Internal Revenue Code 6013G, Internal Revenue Code 6013H, and the Treasury Regulations Section 1.1411-10G. If you don't know what any of those are, that's perfectly fine. The instructions contain some information. So the first two elections, Section 6013G and 6013H, refer to different parts of the tax code for joint tax filers. So Section 6013G is where a non-resident alien, that's what NRA stands for, is married to a U.S. citizen or a resident at the end of the tax year. 6013H is where at least one spouse was a non-resident alien at the beginning of the tax year, but is a U.S. citizen or a resident married to a U.S. citizen or resident by the end of the tax year. And then the reference to Treasury Regulations 1.1411-10G, you can see that there's a couple of hyperlinks in the form instructions, and so we'll zip down to that part. Generally, you can make this election if you own stock of a CFC, which is a controlled foreign corporation, or a QEF, which is a qualified election fund. If neither of those apply to you, then you simply don't check any of these boxes up here. The odds are pretty high that if one of those situations applies to you, you're probably going to be using your tax professional to walk through this form. With that said, we'll take a step-by-step approach in going through this form for taxpayers that are interested in learning more about how to do this yourselves. So at the very top of your form, your tax prep software is going to populate your name, your social security information. A lot of this information will probably come straight from your tax return, depending on your tax software. but there are instructions for each of these line items, and you can go through each of them right here, right? So line 1 will tell you the taxable interest that you're pulling from the appropriate line in your 1040. Again, if you're using tax preparation software, this is being done automatically. So, and line 1 is the taxable interest. Line 2, ordinary dividends as opposed to qualified dividends. Annuities, rental real estate, royalties, partnerships, all of that would be on your Schedule E if you filed that. Adjustment for net income or lost derived in the ordinary course of non-Section 1411 trade or business. And you'll combine those two lines of 4A and 4B to get to 4C. So real quick, we'll go back to the instructions. And so for 4A, you're looking at all of this information. This is going to come from your Schedule 1, line 3, Schedule 1, line 5, any of these applicable other lines. For 4B, the adjustment for net income or loss derived in the ordinary course of a non-Section 1411 trade or business. So these are the net positive or net negative amounts for certain items that are not included in determining net investment income. So income or loss from a Section 162 trade or business that's not a passive activity, net income or loss from a Section 1411 trade that's taken into account for self-employment income purposes, royalties in the ordinary course of a Section 162 trade, or passive losses from a former passive activity allowed as a deduction in the current year because of Section 469. Additionally, there are a couple of other adjustments that you can take. Non-passive net rental income, that's a non-passive activity. Other rental income or loss from a Section 162 trade or business reported on your K1. Net income that's been recharacterized under certain circumstances. So all of these adjustments are what will help you come up to 4C, which is your total, I guess, qualified income under that category. Line 5A, net gain or loss from the disposition of property. Again, this would generally be considered capital gains. 5B would be net gain or loss from the disposition of property not subject to net investment income tax. And then you're going to make the adjustment on 5D for any other adjustments from the disposition of a partnership interest or S corporation stock. So again, this is pretty highly technical information, and the odds are pretty high that if any of these situations are applying to you, you're probably going to be using your tax professional to walk through this paperwork. Adjustments to investment income for certain CFCs and PFICs for line 6, and then line 7 contains other modifications to investment income. Line 8, you're going to combine all of these lines, and this represents your total investment income. Go to part 2, investment expenses that are allocable to investment income and modifications. So in lines 9A, B, and C, you'll enter investment interest expenses, state, local, and foreign income tax, and then any miscellaneous investment expenses. You'll combine them in line 9D. There are additional modifications that you might be able to use to adjust this, and then you'll combine all of those under line 11. So really briefly, go through the form instructions, and you get to line 9A at the bottom. It walks you through where to get your investment interest income, investment interest expense. Generally speaking, if you're deducting on Schedule A, you might find it there. The 9B, the state, local, and foreign income tax, miscellaneous expenses. There's a worksheet for you to complete if any of those expenses are applicable to you. And then line 10 contains additional modifications. So in part 3 is the actual computation of your net investment income. So you're going to subtract line 11 from line 8 in part 1. For individuals, you'll complete lines 13 through 17. For estates and trusts, you'll go down to line 18 and complete 18 through 21. So you don't do both. It's an either or situation. Let's start with individuals. So line 13 is the modified adjusted gross income, which generally is your adjusted gross income with a couple of modifications, usually adding certain tax items or taking out certain tax items. And so there is a modified adjusted gross income worksheet for line 13. You're going to enter your AGI and then go through step by step with any foreign earned income exclusions. If this is not applicable to you, then line 4 will likely end up looking a lot like line 1. Adjustments for certain CFCs and PFICs. And then again, the threshold based on your tax filing status. Depending on your status, your tax filing software should automatically populate line 14. You're going to subtract line 14 from line 13. If it's 0 or less, you enter 0, and then you'll enter the smaller of line 12 or line 15. So if line 15 is 0, then you're going to enter 0 into line 16, multiply that 0 by 3.8%, and you'll include that additional tax of 0, both here and then on your tax return. Of course, for most people that are completing this form, there will be some positive number that you multiply by 3.8%, and you'll add that as an additional tax. Right here, usually there will be a line on Schedule 2 if you're filing a 1040. If you're filing a 1040 NR, then you'll include that line on your residency statement corresponding to your Schedule 2, and you'll have to follow the instructions for your 1040 NR. So for estates and trusts, a little bit similar, but there are a little bit, some modifications that are required. So net investment income goes into line 18A. Then there are deductions for the distributions of certain net investment income and deductions under Revenue Code 642C. You'll subtract line 18B from line 18A to arrive at undistributed net investment income. And again, if it's 0 or less, then you'll enter 0. 19A, you'll enter the adjusted gross income. 19B is the highest tax bracket for estates and trusts in the given year. And then you'll subtract B from A, and you'll enter 0 if it's 0 or less. You'll enter the smaller of either line 18C or line 19C for line 20. You'll multiply that number by 3.8%. You'll include that at the bottom of this form and then on your tax return, depending on what entity you're filing on behalf of. So this is a complicated form. It can be if you're either a foreign resident or a non-resident alien, if you have certain foreign sourced income. There's a lot of moving pieces here. for most investors that are looking to do this by themselves, if you don't have any of those tax complexities, you may be able to do this with your own tax filing software. But I always encourage people to consult with their tax professional when looking into this. The few $100s that you spend having a professional prepare your tax returns may very well yield thousands of dollars in a missed tax break that you wouldn't have caught. So if you want to learn more about this, please go to our website, teachmepersonalfinance.com, type in IRS Form 8960 in the search bar, and you can read all about our article. And if you like this video, please subscribe to our YouTube channel. If you have any questions, please feel free to reach out either in the comments or via email. Thank you very much.